Jessica, Thomas, Richard, David, Linda, Mary, Robert, Donald, Lisa, Chris, another Chris, Daniel, Joseph, everyone welcome. Too many names to read out. If I've missed your name, I apologise. Those of you with a slightly complicated name, I did not want to embarrass myself by trying to read out your name, so welcome as well. Let's get stuck into it. It's just after 2:30, so I will start sharing my screen. All right, everyone. Well, as I said, this is Wednesday, the 10th of March, 2021. Question time. Welcome. Those of you that haven't joined us before and are wondering who is Salvo and what do we do? Well, we do a ton of things. However, ultimately, everything we do is all about helping create homes for people. The people just like you on the call today, whether that be, you're first starting your journey and just looking to rent a place for the first time. Maybe you're looking to build a new home or looking to upgrade or buy your first home. And also, of course, one of our favorite customer groups, investors. We're all about helping you reach whatever those dreams are and creating that home that you're looking for. A couple of themes we want to run through this week. A lot of very, very interesting things. I'll quickly touch on them. Those of you that are not sure what this is, typically what we like to do is run through the themes in the weekend's newsletter. Everyone who is joining us live today on Zoom, you have the opportunity to drive the process and ask us whatever questions you've got. If you're on Facebook, unfortunately, we can't answer your questions direct from there. I only know how to handle one screen. However, next week, if you want to actually ask your questions, feel free to send them through on the email or register. I think the link is there on that Facebook post and join us live next week. All right, so quickly, what are the themes? One of our favorite ones, how to choose a property manager. Very interesting theme, and I think Lucas is going to give us a ton of tips around that process. As always, the start of a new month, CoreLogic put out the house price results. We haven't chatted about these yet. However, very, very interesting the way things are panning out. Interest rates, we always talk about, should you fix, should you go variable? Typically, I've always said to everyone, stick to variable. Right now, I'm telling everyone, lock in those fixed rates. However, it's not always the case, so we're going to chat more about that. Who wants to live in cities anymore? Well, if you believe what everyone's been saying the last 6 months, you would think no one. But it would appear that shift is slowly starting to change already. And of course, demand continues to outstrip the supply of houses at the moment. So that's a good segue into, as always, last week's auction statistics. Clearance rate, massive again, just under 85%. You can see there, every single capital city was over 80%. Melbourne had the lowest at 80.9. Still, an 80% clearance rate is absolutely phenomenal. So we're continuing to see this week after week that auction results are very, very strong. Was a lot lower volume last weekend than we've had the previous weeks. Obviously, 4 out of the Australian states had a long weekend last weekend. Here in Victoria, we had one, and hence why you'll see we're down to just under 500 auctions compared to, I think, Jack was talking about it last week. We had almost 12 or 1,300 auctions the previous week. However, still very, very good, strong results. I think we're going to talk a bit more about this as we get stuck into the session, but you'll see from those results that the housing market is looking very, very strong in 2021. Those of you that haven't seen this before, realestate.com puts out what they call a lead indicator as to what they see for the weekly buyer demand. Now, this is not an exact science. Realestate.com is the largest Australian real estate listings platform. So what they really do is this is all of the data on their website only, and it just gives an indication as to what they're seeing. So they mark a number of factors that they believe shows the intent of buyers, and they publish that every week. So it's not perfect. However, it does give you a bit of an insight into the amount of activity that's occurring. And typically these things tend to point to a leading indicator as to what might be happening in the coming months in terms of the intent of buyers actually wanting to close a transaction. So what do we see? Nationally, we saw the intent slip slightly down again. I think it was just under 1%. So you can see from the left graph, and that black line is down slightly. However, we did have, I think, a couple of weeks ago, a peak prior to that. So it's still significantly higher than it was this time last year. Despite the dip, as we said, this is the third highest intent on record, and demand is up 40% on the same time last year. Now, I think I mentioned it last week. I think we're going to see with all these graphs, probably for the next, till the end of the year, it's going to be a little bit skewed, as obviously you can see from those grey areas, marks when Australia first went into its first lockdown with the effect of the coronavirus. So obviously the year-on-year stats are going to be a little bit skewed during that period. However, it's still a good marker to have a look at. Across to rental, for those landlords out there, it's been a tough last 12 months. There was the typical spike in demand, both nationally and here in Victoria, just post the Christmas time. That's continued to drop down. What exactly that means, I'm not too sure. We've chatted about it quite a bit, that in every state across the country, at the end of this month, those interim laws that put all the power in the tenants' hands and left most landlords pretty much powerless come to an end. So we would imagine that things will start to turn around and change slightly as that happens. Despite that, it's obviously up 16% higher than it was a year ago. Again, as I said, with the buyer demand, you're going to see the same with the weekly rental is going to be skewed year on year from this day onwards. All right, my favourite question for those of you that haven't joined, I always like to pose a question first. I want to know what's going to win the day, information or knowledge. Greg, you're the only face I can see. What's the answer?
Absolutely knowledge, has to be.
All right, so knowledge. Why do we say that? Pretty simple. Information is organised data about something. Knowledge is an understanding either from education or experience. So when you look at that, knowledge in itself is taking on board that information, understanding it, working out its relevance to you, if any, and actually applying that into what you should be doing in the future. Whereas information is just purely organised data. Now, information in its own right can be very dangerous. Those of you that have joined before will know we always talk about the fake news problem. It's worse than it's ever been over the last 20 years that I've been working in real estate. Why is that? Because of social media and the number of outlets over the internet that you can just publish your own comments, views or thoughts and allege to be an expert makes it very, very hard to actually get reliable information. That is why the knowledge is so important, because just reading information in its own right, you need to be able to interpret that information, understand its relevance to you, as well as the quality and the reliability of the originator of that information. How do you fix that? Number one shortcut, find someone who's been there, done that, and get them to help you. If you're not sure or you don't know anyone, well, that's why you're here today. This is the best place to be. We will break down all of that information from the last 7 days, tell you what it means, and most importantly, help you turn that into what we're going to call actionable knowledge. So that actionable knowledge is actually building up that information into something that you know what it means for you specifically, and what you should be doing in the future to make sure that you achieve your goals and your intent. All right, I've been going on for just over 8 minutes now. So who am I? Those of you that missed, my name is James Maitland. I'm the General Manager here at Salvo, and I've helped create more than 11,500 homes for people over the last 20 years. So very much, I've got a ton of experience, but when you see the panel, we're joined first by Greg, who's been doing this for pushing close to 40 years now, Jack pushing 20 years, and Lucas pushing 30 years. So collectively between all of us, we've got almost 100 years experience. So we know what we're doing. We love this. We love helping people, and we're looking forward to getting stuck into the questions. I can already see that we've got heaps of questions in the Q&A, so I'm going to start reading those. While we do that, I'm just going to stop sharing my screen. So first up, while I'm reading those questions that have come through, Greg, CoreLogic, Feb stats, phenomenal results. What did we see, and what's some of the key takeaways?
The key thing is we've seen the biggest increase per month, just get that clarified, that we've seen in 17 years, which is quite phenomenal. So just over 2.1% in the increase in house values in the month of February, which is pretty phenomenal.
So just in February, it's gone up
Just February.
2.1%.
So that, let's clarify that. That just means that the housing market is still showing that it's growing and growing and growing, but we've seen the biggest single increase in values for the last 17 years in last month.
Wow. Okay. So why are we seeing such a strong market? You know, we're not that far out from Corona. Why is it so strong?
I think, as we've always, every time we cover it, there's the various incentives, low interest rates, and there's a few other, you know, items out there that are definitely pushing the envelope.
Anyone got any sort of views on, you know, whenever we see these strong price growth, I always like to look through to the underlying level of transactions and the amount of demand versus supply. Has anyone got sort of any views? Like, are we actually seeing a high level of demand and supply, or where's that sitting?
Yeah, look, James, most definitely. The buyer demand is growing faster than supply, and this obviously pushes up prices, and that's why we saw the fastest increase in 17 years, as Gregory correctly pointed out. The research shows that the buyer demand, which is actually, it's measured in actual sales, right? Not interest or inquiries, in actual sales, is significantly ahead of supply in February. Now, overall listings fell by 2.7% in February compared to January. You might not think that's a huge difference, but January is the slowest month in history on record, always, traditionally. January is our quietest month. So you expect it to surpass it by far.
Yeah. So what you mean by that is, let's say, I've got no idea what the numbers are, but let's say there's 10,000 listings for homes for sale. It's actually dropped by almost 3% from January through to Feb. And as you said, there's always the Christmas shutdown, New Year period. Typically, as real estate agents, we don't like to get off our bums and do any work until after Australia Day. So you're saying, despite it already being a low month, it's dropped again. And that's through actual sales going through and transactions, not people pulling out.
That's right.
Okay. So, you know, it'd be fair to say, for anyone worried about it and thinking that this is just a statistical anomaly, i.e. there's only been 5 or 6, for example, transactions like we see in these mining towns. There's a huge depth of transactions going on and excess demand out there.
I think, James, on top of that as well, the CoreLogic has shown that cities such as Melbourne and Sydney, and Melbourne, which have lagged, are actually showing the biggest sort of recovery in the last month as well. So that's very encouraging.
So big is back. It's no longer just these small sort of towns. So what about regional? I mean, that makes me think, you know, we've talked a lot about regional. What
CoreLogic are also showing is that the gap between the increase between in regional, and there seems to be that is decreasing. And I think Jack's got a lot more in depth on that as well. But yes, there's the gap between the values in the big cities and the regional. Big cities are definitely catching up.
And when you say that, that's not actually, I'm assuming city house prices are still high. It's just the level of growth we've seen over the last 12 months you're talking about.
Correct. So in the regional stuff, they saw phenomenal sort of growth during COVID-19, but that gap is reducing. The gap between the growth of the regional and the growth of urban is getting smaller and smaller, which is encouraging again.
Okay. Why are we seeing that? What's changed?
James, I think it's actually the city property now is take over the regional. So it's generally speaking, the last 12 months, the regional property performing very well. So we saw the regional as a boom. But at February, and I think the capital city in Australia, the market has overtaken the increase of the regional, which is the second month after the January in the past 12 months. So we're saying after 12 months, before the 12 months, the last 12 months, it's 10 months, the regional performed very well. And from the January, February, and the city is back. So the city property now is increased more than the regional property. I think this is showing the trade that people are moving back from the regional.
So why, you know, pretty much we've touched on it for most of the last 6 months, but if you open any sort of paper, and typically there's always a story about this shift to regional Australia, everyone's leaving the big smoke and heading out to regional Australia. Why, is that not the case? We're starting to see that reverse, or what are you seeing out there?
I think it's timing now from the people they start to moving out from the city into the regional. Now it's nearly 12 months. So typically, lots of people, they move into the regional in the very beginning. They renting a property. Like the last week, we discussed this before. They just have a trial. They just have the try if the regional lifestyle is what they want. After the 12 months, after a year, the lease is ending, then it's a time to reconsidering if they keep living in the regional or they back to the city. As long as providing we got vaccine rolling out, Melbourne City, Sydney, we're back to normal. Everything is reopening. So the things is used to be attractive people living in the city now is reopening. So everything is coming back. So the people, they were moving to the regional now, they're missing the city life. So that's the why most of them, they're thinking, okay, I'm gonna go back. I'm gonna moving back to the city.
Yeah. So Greg, I know you're a mad Bombers fan, and Anzac Day game, MCG, I heard, we can have a big crowd finally there. That must be one of the reasons why everyone's coming back from the bush, is it?
Well, as you know, I used to live in the bush as well, and now I'm living in the city and can't wait for the fact that I can actually get back to games again at being an Essendon member, So absolutely.
Now the Bombers, are they going to win this season? What do we for everyone out there who's a Bombers fan?
I don't want to swear. I'm not even going to go there. I don't want to be disappointed later, So, okay. But hopefully we can get the last grand final I went to. Even though I speak funny, I've actually been to a grand final. Was in 2001 when we lost to Brisbane, and I was at 2000 when we beat. What are those guys? The white collar blokes, Melbourne. So,
all right. Well, let's talk about something else positive. Yeah. We hear a lot about people concerned about apartments. What did we see from CoreLogic? What are they seeing as the growth? What's the sort of historical stats been?
We've actually seen houses increase by 8.2% and apartments by 6.2%.
Okay.
So there's a clear increase for both.
So when we hear that apartments are losing value, that's not represented in the sales transactions coming through?
No, not based on that, but we've got available to show us, no.
Okay. So what, before we wrap this topic up, what could stop? I mean, it seems like we're on a roll now, the positivity is starting to come back. Jack said everyone's moving back to the big smoke. The footy's back on. Our favourite rainy, cold weather here in Victoria is about to start again. Everything that we love. What could stop this roll that we seem to be on?
Well, James, we need what they call a circuit breaker in order for this to sort of end. And so for people out there, to put it in just plain English, you need things like, for example, the unemployment to start growing. But we've seen the actual opposite. We're seeing it getting better. We need to see the interest rates increase dramatically, which we all know we've been promised that at least for the next 2-3 years, it's not going to happen. So unless the government sort of steps in and intervenes or maybe regulating lending by the banks, which is very unlikely to happen, I don't see where things are going to slow down, not at least for the next 2 to 3 years.
Okay, good. All right. There's a lot of questions coming through there. I think we've probably covered off most of the ground. As I said, if we haven't, we'll try and come back to you at the end of the session. So I want to move on to one of my favourite topics of late, fixed interest rates. I mentioned at the top of the show, I've been recommending to anyone that asks me at the moment, take that fixed rate when you see an interest rate with a 1 in front of it and you can lock it in. I think one of the guys in the office was just asking about, and I think he locked in 1.96 for 5 years. I just can't see how you can possibly lose locking in those rates. However, Jack, you've pointed out to me a few times that I should keep my mouth shut and let you guys do the advising of people. what are some of the reasons for people, or what should they be careful of or think about before they take up my advice to lock in one of those fixed rates?
James, I think your advice is correct because it's showing.
Thank you. You'll get a pay rise this week.
Okay. Yeah, okay. I think from the ABA they said, and for the fixed rate now, normally the people they prefer to take the variable rates, but now from the CBA Commonwealth Bank they said that the fixed rate loan is more than 40%, which means more than 40% of people they're happy to take the fixed rate. The loan. The reason is too simple because you can't get the much more lower the rates. Currently, like you said, 1.96 is historical low. I couldn't see any rates can lower than that. But what I want to say is...
Sorry, Jack, just to ask you a question there, though. So Lucas was talking about a circuit breaker. I was looking for the circuit board somewhere here, thinking he was talking about electricals. But one of the things that you were talking about, Lucas, was interest rates going up, but Jack just said you got 40% of people looking to take out fixed rates. Would it be fair to say that interest rates is sort of out, unlikely to even make a change now if that level of people have taken it on a fixed rate?
100% right.
Yeah, okay. So sorry, Jack, I think you were going to just tell us some of the reasons why or the features you might be careful of.
The reason is because, for example, like everybody got different situation. Because I had a few clients last weekend coming to ask my opinion. I would say, of course, if we take advantage of the low interest rate, you go for the fixed rate. But before you considering you went to that agreement, you have to look. First of all, is any hidden cost if you take like
banks would actually charge you extra fees and hide their fees from you? That doesn't sound right.
Some of the charge you the main, some of like the setup fee and sort of the fees you need to considering into that cost, because the reason we want to take the fixed rate is want to saving the money, but eventually you have to look at, for example, you're comparing the different bank, you say which you get a lower cost, then you go into that bank. Second of all, it's you need to consider it because once you go into the fixed rate, it's most likely if you want to get out the fixed rate time period earlier, you need to pay the break fee, which is almost every bank will have that such policy, which you need to consider. For example, maybe you should fix like 2 years, 1 year rather than 3 or 5 years, which gives you more flexibility. And another thing is comparing with the flex rates and the variable, and the big advantage of you take the variable rate is you got an offset account choice, which means if you got enough saving, you put in this offset account can dramatically reduce your interest payment. So sort of the things you need to consider before you choose the fixed rate or variable. Or another option is you might split like 50-50. 50 you choose fixed rate, 50 you choose the variable. So give you sort of like the flexibility, but in the same time, you're still saving the money to enjoy the historical low interest rate.
So what you're saying is let's fast forward that. People out there might say, look, I know I'm going to be earning some extra money, bonuses, coming into an inheritance or something, and I want to pay down my debt. They might need to pre-plan and say, okay, that's going to be 20% or 30% of my loan, and leave that portion variable so they can pay it off and fix the balance.
Yes, that's correct.
Okay. All right, sound advice. I still say to everyone, borrow as much as you can right now and lock in a fixed rate, because I don't think we're going to see this again in at least my lifetime. Most of us know from either ourselves in Greg's position and his age, or for the rest of us from our parents going on and on about, back in the 80s or 90s, they were paying 17% on their mortgage. To be paying 1.99 is a good slap in their face, and I would take it while you can. All right, so property management, love this topic. Those of you that don't know, we have a very, very large property management business, so we chat about this all the time. Lucas, why is it so important to get the right property manager?
Well, once you buy a property, it becomes a business. It's an investment. So as every good business, you want it to start making money for you right away. So this is why getting a property manager, it's probably the most major decision you'll ever make, and it could be the difference between a hassle-free decision or a very regrettable one.
Okay, so I want to ask you about fees in a minute, because everyone seems to judge everything on price. But just tell us first, what are some of the fees for those people that perhaps haven't delved into investment property yet, or are just thinking about it, or even for those that don't realise, what sort of fees typically do property managers charge?
So basically the property management fee that everybody sort of asks and seems to sort of base a decision on is between 4 to 8%. Now there's a lot of fees.
That's of the rent that's collected, is it?
Correct.
Yep.
Between 4 to 8%. It's very, most of the people charge that. Now, but there's a lot of other fees that are involved that a lot of people forget to think about. So you've got a monthly administration fee, you got an advertising fee, you got lease renewals fee, you got yearly statement fee, you got tribunal court attendance fee. And the list goes on and on and on.
It sounds like a bank. It sounds like Jack telling us before, watch out for hidden fees.
That's right. So, whether somebody might charge you 4% and then they have all these other fees, and every time you ask a question, you basically get charged. So It's very important to look into everything.
Okay. So, you said the range is typically between 4 and 8%.
Correct.
So, why, just on the face of it, I'm guessing most callers out there would typically say, why would I pay 8% when I can pay 4%? Why is price not always the most important? And what can you expect, if you're paying at the upper end versus the lower end, or what does it all mean?
Put it this way, as a landlord, and I'm a landlord myself, you got to look beyond fees, because what's important is the services that are offered, because ultimately having somebody that does the right thing and look after you correctly could save you thousands of dollars down the track. So, there's a lot of things you got to look into it. There are companies that offer great online portals, which allows landlords to track leasing payments, leasing documents, maintenance requests, and so forth. So much, everything you need to know. But, I've got some great tips to help all our listeners today.
All right, before you give the tips, Judy was just asking a question. I assume she's asking, what do we charge? What, just for that headline rate everyone's thinking about, what percentage do we typically charge people?
We charge a very, very, very reasonable 5.75%, which is 5.5% plus.
Sold. I'm in. I'll give you all my properties. I think you've already got them, don't you? All right. So give us some tips. I know, let's round this out because we're getting close to the end time. Give us some tips for everyone out there, how they can pick the right property manager for them.
Okay. So look, when you're choosing a company, make sure that they have experience. Find out that you have one point of contact. So, sometimes a different person emails you, a different person answers your phone, and a different person looks after your property. So it's important to have one point of contact, somebody that if you need to clarify something, you're not sort of beating around the bush and being transferred from one person to another. Yep. You want to find an experienced property manager because ultimately, as I said, at the end of the day, through the experience, they can save you a lot of money from things that an unexperienced property manager might not see. Choose a company that's willing to work hard for you, somebody that's open 7 days a week. Let me think. Salvo Real Estate, I believe, do that. People that, a property manager that would pay all your outgoings and all your rates and all your bills, so it's less hassle for you. As I said before, look out for all the hidden fees, because somebody might charge you 4%, but then everything else just accumulates. Now, very important, make sure when you choose a property manager, ask them how often are they going to do the inspections, what we call periodic inspections. This is where the property manager will go through your property to make sure that it's maintained. Like I said, this is an investment. The damage that could be done to your property could be into many, many thousands. So it's very important to find somebody. There's no point charging 4% and I go once a year or when the tenant is out. That's not good service. So make sure at least every 6 months they would do an inspection. And look, finally, I think you should choose a company that embraces technology. You know, a company that's up to date with everything, looks closely at the rental market so that the property manager can suggest, educate the landlord when reviewing the rents, as well as the presentation of the property.
Yeah. So I think we also mention quite often, which I think is what you're getting at, that it's important to, you know the area, be a local expert, rather than, you know, getting, for example, chasing a low price for someone who perhaps is, you know, office is based an hour away, you know, someone who might be based in Melton to manage an inner city apartment. Practically, they're not going to have their finger on the pulse, or, you know, be able to easily get to your property to show it for open homes, are they?
That's it. And I know we have to go, but I think one other point that we should tell people is try to also have a company, because there are some companies that only do property management and that's it, nothing else. Try to go with a real estate company that not only does property management, but if one day you decide to sell the property, they can also look after you in that perspective as well. So it's always good to go with somebody that can give you the full service.
Okay, great. All right, well, we've gone a few minutes over, so let's end it there. As I said, anyone who's still got questions will hang around at the end. I just want to make a few closing comments, so I'm just sharing my screen. We shared a great amount of information there, answered heaps of questions. Hopefully you've got something out of today. If you did, the way that I see your path forward is you can go down path A, which is the tried and tested path. And there's two options there. You can either do nothing. Maybe you enjoyed today's session, you got what you wanted. However, let me just remind everyone that if you don't make a change, then you must expect to continue getting the same results. So if you're happy with the way things are going and there's nothing you want to change, then great. I appreciate you for joining us today. As a bare minimum, what I really hope you do is take on board what we've discussed. You know, think about turning all that information into actionable knowledge, and get out there. We've talked about how to do it, and do it yourself, and make sure that you build that database and make sure you achieve what you want to do in 2021. But what I really, really hope you do is you let us help you. So do it with us. That's what we're here for. That's why we hold things like today's session. And I think that that's the best way we can help you fast forward and create those shortcuts to achieving what you want. Now, how can we do that? Well, there's a ton of different ways that we can do it for you, but perhaps the most active and most dedicated way is to catch up one-on-one, whether that be face-to-face, or we can do it over something like Zoom or FaceTime, or even just chat on the phone. So I've set aside time in everyone's diaries over the next week, specifically to meet with people like everyone on the call today. Now, what does this involve? Typically, we're talking about 15, 20 minutes. Doesn't cost you anything. It's quick, it's fast. Really just to meet one of the guys, have a bit of a chat about the market, ask any questions that you didn't get a chance to get answered on today's session. And then we'll just sort of discuss as to what you're hoping to achieve, your current position, where you are, and what the future might look for you. And then, you know, what steps you might be wanting to take to try and execute on those plans. From that, we can really see whether you will be a good fit for us, and whether we can actually add value to you. Now, if you got value from today, then I think this is the next logical and probably the best step forward. As I said, it doesn't take a lot of your time, it doesn't cost you anything. And really, it's all about making sure that, that you're a good fit for us and we're a good fit for you. So who's it for if you're a little bit unsure? Pretty straightforward. If you're still hanging around today at this time, then it is for you. Typically, you're probably going to be doing all right already, but you know that you want to move to that next level. So I said, you know, you might be going along, but you realize there's more to out there that you can achieve, more you want to understand and create that actionable knowledge. You're going to have to be prepared to put in the work and take those actions. As I said, you want to increase that database of knowledge, and of course, actually roll up your sleeves and get to work on it. So if that sounds like you, and you want to get involved and you want us to try and help you with that journey, how do you do it? There's a link in the chat. Click on that link and you can book straight away. Have a look in your web browser that you got redirected to this Zoom login. Those of you on Facebook, you should also see in the post the link there as well. Jump on that, book your time and go for it. Those of you that don't have your diary or you're not sure about it yet, we'll send you a follow-up email with the link. If you're watching on Facebook, obviously we don't have your registration details, but there is a link in that chat and you can come back to it. That is it for today. It was short, it was sharp. I think we shared a lot of information and hopefully you got some good value from today. So if you've got more questions, we'll hang around. Otherwise, for those of you that are leaving us now, thank you very much. Appreciate your time and I look forward to hopefully seeing you again next week. As always, we do this every single Wednesday, 2:30 p.m, rain, hail or shine. So those of you that are going, bye for now. And those of you that are hanging around, we'll check the Q&A in a minute.